In fact, let's welcome in the management at Lupin right now, Mr. Nilesh Gupta, Managing Director at Lupin, Ramesh Swaminathan, Executive Director, Global CFO and Head Corporate Affairs with us now. Good morning, good afternoon, gentlemen. Thank you so much for taking out time for us. Nilesh, if you could just start by, summarizing the quarter. What happened in US, what happened in India? There was a licensing income and that's why the numbers are looking in good, but when you adjust for that, margins are looking in pretty weak. Can you just summarize Q1 for us?
From our perspective, obviously the quarter was bolstered by the licensing income, and we're very happy that we made that happen. That being said, if you take that out, obviously the numbers are not where they should be from a gross margin perspective, and certainly not from an EBITDA perspective. The main weakness was driven from the US. The US numbers were about 20 million lower than what they should have been. Couple of factors. One, we had two competitors come into famotidine, which was a very meaningful product for us. That drove it down significantly. And the second part was albuterol, where sales have been lesser than what would be expected. I think we've changed albuterol from spot purchases to locking in long-term customers, which I think is great from the sustainability of the business. But the pull-through has been lower in Q1. In August, we see it ramping up, and really in Q3, Q4, that's where we hope to get to that 18 to 20% market share in albuterol. So you'll see much lower numbers in Q1, much better numbers going forward. Brovana obviously helped from the US perspective, but all in all, the US came in lower because of these reasons. There was also certain failure to supply. Provisions that were made because we had supply issues in the past, which we've now dealt with. But all of these together, little lighter than it should have been. Obviously, that affected the saliency of the business. With that, India looks bigger. India looks lower on the gross margin line, but it's actually better on the EBITDA line. But all in all, that's what depressed the gross margin line, and then that's what filtered through to the other lines as well.
Good afternoon, Mr. Gupta and Swaminathan. This is Cheryl also joining in the conversation. Mr. Swaminathan, this one is for you. The US sales, actually, we've seen it come in weak. What exactly happened in that particular segment? And also, if you could shed some light on which product saw most erosion.
So as Nilesh was saying, famotidine in particular, because of newer competition, we had lower prices out there. The second, of course, was albuterol, and as Nilesh correctly attributed, it is essentially because of order facing, from spot buys you're going in for longer term contracts, and of course the pricing to the extent would also get adjusted. There was also an element of failure to supply, which is captured in the current results. Whilst Brovana is certainly there, it's still ramping up. So all of these reasons contributed to, in fact, the sluggishness in America.
So, Ramesh, one part, of course, was that the pricing erosion, which you just mentioned about. But what happened to the margins? So, does the pricing erosion pressure came more on margins, or were there some cost as well in this quarter which actually got elevated?
So there are two parts to this, So if you speak about, in fact, gross margins, it's down to 63.9%. This is caused by, a change in reporting of partnered products in the US. Royalties on partnered products were earlier reflected as part of SG&A expenses. We are now taking it as part of the, into the gross margins line itself, and that is one part of the story. And of course, when you speak about gross margins, it is also usually led by what's happening in America. As we just spoke, America is lower for the reasons that we just outlined, and that has had its impact insofar as the gross margins are concerned. Whilst of course there is of course the boring ringalayam thing, which of course bolstered it quite a bit. When you speak about other costs, so the endeavor is still on. Employee costs this time around were higher than Q4, only because the fact that Q4 was particularly low because of reversing out of various incentive provisions and the like, because as you recognize, sales were much lower last year itself. So we were, if you were to go down history and look at the various last 4-5 quarters, our employee costs have been coming down, and you recognize it's actually on a tight leash. Manufacturing and other costs, were actually lower, and this is partly because of the fact that we removed, the royalty on partner products and put it into the gross margins line itself.
Mr. Gupta, this one is for you. What can be the exit rate for the United States? Usually it's around $800 million. Can we expect this target to remain for this year as well?
Yeah, so I think we'd still be close to 800 as we round up the year. We expect that ramp up, especially in Q3, Q4. Even Q2 will be better than Q1. And like I've said, we really have to keep this north of that 200 million per quarter kind of number. We certainly see it getting there in Q3, Q4 and onwards, right? So I think next year we have tiotropium, we'll still have albuterol running through a full year, we'll have other new launches as well. It is critical for us to keep it north of the 200 million, but right now we also see the visibility, not in Q2, but Q3 onwards, we certainly see the visibility of getting there.
Nilesh, you look at the India business pretty closely. Branded sales did well, 27% growth, but still one would say that looking at the overall number, it's not that great. Do you think this will lead the growth as far as business is concerned, because US is facing pricing pressure? You track India business closely. How do you see branded sales improving from here on?
Sure. So, again, that's a market trend. Obviously, the market did, I think, the highest numbers that it ever did in Q1, as did we. And from our perspective, it was lesser a COVID story, more just the regular products, anti-infectives, vitamins, those kind of products picking up. We do see it coming down. In July, we've already seen it. It's starting to rationalize. All in all, I think we were thinking of likely 12 to 14% growth in India for the year. With this Q1, I think we'll possibly end up in the high teens as far as the year is concerned. But it's been very solid performance. Again, I think we're underdogs in India. We're not number one in any category at all, and there is so much room to grow. From our perspective, we absolutely intend to maximize the story of cardiovasculars, diabetes, respiratory, and building share through building large brands in each of these.
So Ramesh, the good thing in the results were that balance sheet got strengthened. You had a debt earlier and now you have net cash. Can you talk about the strength of the balance sheet, or what you have done on the positive side to make it look stronger?
So as you correctly outlined, we are away from, in fact, debt. We have actually become a cash surplus company. The overall cash surplus is marginal, though, it's just about $50 million or the like. But we would certainly be ramping up with, in fact, more accruals during the course of the year. But having said that, as with every other company, we are also very ambitious. We would like to see the idea is not to actually accumulate cash holding. The idea is, of course, to make sure that it is used for growing our business itself. So we would be looking at various acquisitions and the like. The idea, of course, is to focus on return on capital employed and see that cash is meaningfully deployed in terms of our capital allocation policies itself.
All right, let's talk about your margin, and Lupin has actually guided for margin improvement from H2 onwards. Could you shed some light on what all could actually contribute to this improvement? Will it be a ramp up in albuterol?
Absolutely. So I think that story stays. It's starting off from a lower base. Definitely Q1 was disappointing. We already talked about the perfect storm that happened in the US. We see it improving in Q2 already. But Q3, Q4 will definitely get to much more respectable margins, the kind of margins that we would expect. And there has, not just this year, I think there has to be a build going forward as well. So, I think the focus is on growth. In parts, the focus is on cost optimization as well. So, for example, in our manufacturing and the like, there is still a cost optimization story that we have to roll out. These two are what are going to help grow the margin.
All right, Mr. Gupta, we leave it at there. Thank you for joining us on the show. That was Nilesh Gupta, who's the Managing Director of Lupin, as well as Ramesh Swaminathan, who's the Executive Director, Global CFO, as well as Head of Corporate Affairs at Lupin, talking about their earnings and the way forward for the company. But if you look at Lupin stock price, it's down about 7% in trade, under pressure definitely, so is the rest of the market. And on that note, we'll slip into a break on this edition of Markets.